Imagine taking every single receipt, invoice, and bank statement your business generates in a month and shoving them directly into your main accounting ledger. You would have an unreadable, chaotic mess in a matter of days. To prevent this, accountants use a filtering system called books of prime entry. These are dedicated logbooks that categorize daily transactions before they ever touch the main ledger. Mastering this specific workflow is critical. The June 2024 Cambridge Examiner's report highlighted that students frequently lose marks by confusing daybook formats and mishandling trade discounts. Filtering transactions through these books allows a business to maintain a clean general ledger, ensuring that the high-volume data of daily commerce is summarized into a manageable, accurate format. This diagram shows the layout of a standard two-column cash book. It functions like a standard ledger account, but with dual amount columns on both sides, one to track physical cash and one to track bank transactions side by side. When money flows into the business, it goes on the left side. If the owner injects an initial cash capital, we record capital in the details and enter the amount straight into the left-hand cash column. When money flows out, it goes on the right side. If we pay for equipment using a check, we write equipment in the details and log the payment in the right-hand bank column. Many three-column cash books include dedicated spaces for discount allowed and discount received. These columns track price reductions given to or received from credit customers for prompt payment. Unlike the cash and bank columns, which must be balanced to find the ending amount, these discount columns are never balanced against each other. At month end, the cashier simply totals each column individually. Because the cash book functions simultaneously as a prime entry book and a double entry ledger account, this distinction ensures that liquid assets are balanced while the total value of discounts is preserved for later transfer. For minor, day-to-day expenses, businesses use the petty cash impress system. This is a designated physical float of cash, used so small purchases don't clutter up the main bank account. We establish this system by setting the float balance at a fixed amount. Let's start the month with exactly $150. Throughout the month, the petty cashier pays for minor things like postage, cleaning, and stationery. We log these receipts into designated analysis columns. As we do, our total spent goes up to $126, and our physical cash float goes down. At the end of the month, the chief cashier checks the records and replenishes exactly the amount spent. By depositing that $126, the float is restored to the original $150 for the first day of the next month. This replenishment provides an immediate internal check. If your remaining cash plus your expense vouchers doesn't equal that starting $150 float, it indicates an unrecorded expense or missing cash. While cash transactions are handled immediately, credit transactions are logged using journals, commonly called daybooks. These are chronological lists used exclusively for credit purchases and credit sales. When preparing a purchases journal, remember that it is not a ledger account. Unlike the general journal, which uses separate columns for debits and credits, a daybook is a simple, single-column list of names and net values. Consider a purchase of $1,100 worth of goods on credit, where the supplier offers a 20% trade discount. The first step is to calculate the specific reduction. 20% of the $1,100 gross price results in a $220 trade discount. Trade discounts are never entered into the double entry records. Because there is no dedicated ledger account for trade discounts, they must be deducted before any entry is made in the journal. You record only the final net amount. You subtract the $220 discount from the $1,100 and enter $880 directly into the purchases journal. Deducting the discount immediately ensures that only the actual cost of the goods is reflected in the business's financial records, preventing the overstatement of purchases. To integrate these lists into the main accounting system, we look to the end of the month. The daily entries in your sales, purchases, and returns journals are tallied to create a single monthly sum. This consolidated total is then transferred from the prime entry book into the nominal ledger. Rather than posting 50 individual credit transactions throughout the month, we take that monthly total and post it as one bulk debit to the purchases account in the ledger. This consolidation is the functional advantage of prime entry books. It allows daily activity to be batch processed into one clean line item. Following these steps results in an organized financial system, a balanced cash book, a restored petty cash float, and accurately totaled daybooks. By utilizing this workflow, you ensure that transactions are correctly formatted and that trade discounts are handled according to standard realization principles. Prime entry books provide the structure needed to manage complex transaction volumes while maintaining the integrity of the general ledger. To refine your understanding of these workflows, visit studybuddy.tech to download our comprehensive revision checklists for your upcoming accounting exams.